We don't often think about it, but market research, it's kind of this invisible hand guiding so many products we use, like
Yeah.
every single day.
It really is.
And today, we're diving into what happens when that hand, well, slips. When bad market research leads businesses down some really tricky paths and how that actually affects us.
Exactly. It's about the dangers of faulty data, basically. We'll look at how companies can get tripped up, but also, how they can avoid those pitfalls.
Sounds good. So where are we getting our insights today?
We're looking at an article from Cognitive Market Research. It's titled Inaccurate Insights: How Bad Market Research Can Harm Your Brand. The author is Manoj Fagar, and it was updated pretty recently, end of 2024.
Okay, recent insights. Good.
Yeah, it gives a really focused look at the consequences when companies don't really understand their market properly.
Right. So let's jump in. The article apparently kicks off by talking about how this bad research can lead to, well, fundamentally flawed business strategies.
That's the core of it, yeah. If your basic understanding your data is off, then the decisions you build on top of that, they're likely going to be misaligned with, what people actually want or what the market's really doing.
Makes sense.
Yeah.
Like building on shaky ground.
Totally. Imagine a company gets some survey data back. Maybe it wasn't a great survey, and they get convinced everyone is desperate for some new app feature.
Okay, I can picture that.
So they pour money and time into developing it, marketing it based on that faulty assumption.
And maybe the interest wasn't actually there, or not as strong as they thought.
Precisely. The article points this out. It's a huge waste of resources, money, effort, marketing dollars, all focused on something the market didn't really demand, while maybe overlooking something else entirely.
Yeah, and it's not just about one product, is it? The article mentions misreading the bigger picture, too, like market conditions.
Oh, absolutely. Bad research can lead to, say, completely wrong demand forecasting. You either make way too much stock or worse, not nearly enough.
Right, leading to shortages, angry customers, lost sales.
Exactly. Or they might completely miss a new trend bubbling up because their research didn't catch it. Their competitors jump on it, and suddenly they're playing catch up, losing that competitive edge. That's tough.
And what about focusing on the wrong people, the wrong markets? Does the article get into that?
It does. That's another big one. Bad research might suggest, hey, this demographic is your golden ticket. So the company invests heavily there.
But the data was wrong.
Yeah.
Yeah.
Maybe they completely neglect another segment that in reality would have been way more profitable. So you've got misallocated resources, potential financial strain.
And damage to the brand's reputation, I bet, if you keep missing the mark.
Definitely. The article touches on that trust aspect. If customers feel like you just don't get them because you're targeting the wrong needs or the wrong groups, they'll look elsewhere.
It really makes you think, how many company struggles trace back to just not looking in the right direction initially because the map was bad?
It's a very real possibility. That initial research phase is so critical. Now, one reason why that research goes wrong, according to the article, is something called sample bias.
Sample bias. Okay, break that down.
Basically, it's about who you're collecting your data from. If that group isn't like a mini version of your actual total market, then the insights you get are skewed. They're biased.
Gotcha. So if you only ask certain people, you only get certain answers.
Exactly. The article uses a great example. Say a company only surveys its existing customers about a new product idea.
Okay, seems logical, maybe. They already like the brand.
But think about it. Those loyal customers might have very different opinions or needs compared to people who've never bought from you, right? Or different age groups, different locations.
Ah, right. You're missing the perspective of potential new customers. Or maybe people who don't like your current stuff.
Precisely. You might get feedback saying, oh, we absolutely need feature X from your loyal base. But the broader market, they might actually care more about price or feature Y or something completely different.
So you get this, like, echo chamber effect from only talking to your fans.
Sort of, yeah. It can create a false sense of demand for certain things while ignoring the wider potential.
And the article mentions other ways this bias happens, not just who you ask.
Yeah, it also mentions things like sample size. If you only ask, 20 people, that's probably not enough to represent thousands or millions.
Right, not statistically reliable.
Exactly. Or maybe you accidentally leave out an entire demographic in your survey design. All these things lead to incomplete, inaccurate insights. And that, as the article stresses, puts your brand and customer relationships at risk.
Okay, so getting the sample right is huge. What else makes research go bad?
Another major one the article flags is using outdated data. This seems obvious, maybe, but it's a huge trap.
Especially now, things change so fast.
Unbelievably fast. Think about tech or fashion. Consumer tastes, trends, behaviors, they can shift in like months, sometimes weeks. Relying on data from even a year ago might be like using a map from the 19th century.
Yeah, probably not going to get you where you need to go.
The article gives the example of a marketing campaign based on some trend that's already over.
Oh, cringe. Yeah, you see that sometimes. Brands trying to jump on a meme that died last month.
Exactly. It leads to low engagement, maybe even negative reactions. Customers just see the brand as out of touch, you know?
Yeah, definitely damages perception.
And it's more serious than just looking uncool. Outdated data means you might completely miss the next big thing. A new technology, a shift in how people feel about sustainability, a change in regulations.
If you're looking backward, you're not seeing what's coming.
Precisely. And the article is clear that failure to stay current can really harm your reputation and your market position. Competitors who are using fresh data will just pull ahead.
Okay, this next one is interesting. The article says even if you get accurate data,
Yeah.
you can still mess up. It's about the interpretation.
Yes. This is so crucial. Having the numbers, the raw data, that's only step one. You have to understand what those numbers actually mean. Context is everything.
Give me an example.
Okay, the article suggests this. Imagine website traffic spikes right after you launch a new product.
Okay, sounds good, right? Product launch. Success.
Maybe. But the article cautions. What if that spike was actually because of, say, a holiday sale? Or maybe a completely unrelated video went viral and mentioned your site.
So you attribute it to the product launch, but that wasn't the real cause?
Exactly. It's easy to connect dots that aren't really connected. The article specifically warns about assuming correlation equals causation.
The classic statistics mistake.
Yeah.
Just because two things happen together.
Doesn't mean one caused the other. Like sales go up after a marketing campaign. Was it the campaign? Or was it, like the article suggests, maybe just seasonality? Or did a competitor raise their prices, making yours look better?
Right. If you misinterpret why something happened.
Your next move will be wrong, too. You might double down on that marketing campaign thinking it was magic, when really you should be looking at pricing or seasonal trends or something else entirely. It leaves you vulnerable.
So you need analysts who can dig deeper than just the surface numbers.
It's definitely. Context, critical thinking, super important.
Okay, so all these issues, bad strategy, sample bias, old data, wrong interpretations, they must eventually hit the customer experience, right? Affect loyalty and trust.
Absolutely. That's a direct line the article draws. If a company keeps making decisions based on flawed research, customers notice. Products miss the mark. Services don't quite fit.
It leads to disappointment.
Yes. And that chips away at trust. The article mentions a poorly received product launched based on, misinterpreted preferences. It's not just about weak sales for that product.
It makes customers question the brand overall.
Exactly. Especially loyal customers. They might start feeling like, hey, this company doesn't really get me anymore, and they start looking around at alternatives.
And bad news travels fast these days.
It really does. Negative reviews, social media chatter. If a brand seems consistently out of step because its research is bad, the article points out that long-term loyalty just erodes. It's hard to win that trust back.
Which leads us, inevitably, I guess, to the bottom line, the financial risks.
Yeah.
The article is pretty blunt about this. Relying on faulty market research carries significant financial risks. It's not just theoretical.
We talked about wasted investment in product development.
Right. And marketing campaigns that flop because they targeted the wrong people or the wrong message. Think about spending a huge budget on a product launch based on totally inaccurate demand forecasts.
Oof. That's got to hurt the P&L.
Big time. It's direct financial loss.
Hmm.
And beyond the big flops, it's also about the poor return on investment from ongoing marketing efforts based on incorrect insights. Your visibility suffers. Your growth potential is hampered.
It's like trying to run a race with weights tied to your ankles. Constant inefficiency.
That's a good way to put it.
Yeah.
And the article mentions the worst-case scenarios, too. If a company consistently makes bad calls because of bad research,
Yeah.
it can lead to layoffs, serious cost-cutting, maybe even, in extreme cases, the business closing down. It impacts profitability, stock prices, everything long-term. Wow. So the stakes are incredibly high. Okay. So if it's that dangerous, how do companies avoid these problems?
Yeah.
What does the article suggest?
It lays out some really practical strategies. The absolute foundation is prioritizing data quality and accuracy.
Making sure the input is good from the start.
Exactly. That means consciously working to get diverse, representative samples, really making sure the people you're surveying or studying actually reflect your true market.
Get that holistic view we talked about.
Right. And don't put all your eggs in one basket. The article strongly advises against relying on just one single data source or one research method.
Triangulate, like you said.
Yeah, cross-validate your findings. Use surveys, maybe focus groups, analyze sales data, look at social media sentiment, combine different tools to get a more robust picture.
And keep it fresh, right? The outdated data problem.
Crucial. Regularly update your research, especially in fast-moving markets. And importantly, use strong methods for interpretation. Don't just glance at the numbers, dig into the context, the why.
What about the people doing the research?
Good point. The article recommends training teams to recognize their own potential biases. We all have them. And train them to analyze data carefully. Avoid those simple cause and effect traps.
Makes sense. And sometimes maybe call in the pros.
Definitely. The article suggests that if you have the resources, partnering with professional market research firms can be really valuable. They bring expertise, objectivity, specialized tools. It can help avoid a lot of these pitfalls.
Okay, solid advice. Now, you mentioned a fast fact from the article earlier.
Ah, yes. This really drives the point home. It cites a Nielsen study. Get this. 59% of product launches fail.
Wow, almost 6 out of 10.
Yeah. And the primary reason cited, a lack of clear consumer insights and proper market understanding. Basically bad or insufficient market research.
That number, 59%. That really highlights how critical this is. It's not a niche problem, it's widespread.
It really puts it in perspective, doesn't it?
Definitely. Okay, so wrapping this up, if there's one main takeaway for our listeners from this deep dive.
I think it's just the sheer critical importance of getting market research right. It's not just some back office function. It underpins strategy, product development, customer relationships, everything.
And getting it wrong isn't just a small mistake.
No, the consequences are serious, as we've discussed. Misguided strategies, sample bias, old data, misinterpretation, lost trust, huge financial risks. It can really sink a brand, but the good news is there are ways to do it well.
Right, focusing on quality, diverse sources, staying current, careful interpretation, maybe getting expert help.
Exactly. It's about being diligent and aware of the potential pitfalls.
Okay, so a final thought then for everyone listening. Next time you use a product or see an ad or interact with a service, maybe take a second to think. How much of its success or maybe even its failure could be tied back to the quality of the market research behind it? How well did that company really understand its customers? Understand you? What questions does that raise about how businesses operate in our world?
That's a great question to ponder.
Something to think about. Thanks for joining this deep dive.